Greetings, everyone. This is Richard Crevo with our chart reading session for July the 13th. And at the present time, open trades on currency pairs that I have stalked on this drill down process that I personally do. I do this drill down process personally on a daily basis. We're up roughly 870 pips since the first trades triggered back in mid-June. And other trades that we were in have been stopped out for losses. Others have been stopped out profitably as we have trailed our stops. Now, as we go through the charts, if you have any questions about how and why my charts are set up the way they are, please reference the video entitled Chart Tutorial, which was posted on May 11th, and that'll give you a good description of how and why they are set up that way. Also, if you have any questions on anything that we go over in this video or any others that you may view on this channel, please feel free to email me at rcrevofx@gmail.com, just like it says on the slide there. All right, let's take a quick look at the disclaimers. That's a necessary evil, something that we definitely have to do as there is risk in trading, as you know. I won't read it to you, but I'm going to put it up there for a moment and take a look at it. Ignore it at your peril. And I just want to let you know that I in no way guarantee or imply that any setup you see in this video will result in a winning trade. My goal simply is to teach you how to trade so you don't have to rely on anyone else as you continue in your trading journey over the coming months and years. Now, under the heading of teaching, I just want to let you know that I do one-on-one online mentoring. If you're interested in something along those lines, please email me at rcrevofx@gmail.com and put one-on-one in the subject line, and I will be sure to get back to you to let you know exactly what's going on. Now, each day when I do this drill down, I'm looking for trading setups, higher opportunity trading setups that may result in positive trading results. And a trading setup, for those of you that might not be familiar with, it's just that. A setup is a setup, nothing more. It may or may not trigger. It may or may not result in a winning trade. The setups are simply setups that I take a look at and make the determination that they're putting the probabilities of having a winning trade more in our favor, and that's what this is all about, simply probabilities set up in our favor, a trading edge, if you will. And the setup and its execution by no means assures a winning trade. Okay, let's take a look at some of the charts that we have. Hang on one second and I'll get rid of this risk disclaimer. We'll get rid of this. Okay, there's the charting setup. Now, what I do, again, each day, sometimes twice a day, is I do a strong weak currency analysis, and that guides me in the direction of potentially higher probability currency pairs that I want to take a look at. So the last time, which was just probably less than an hour ago, that I did the strong weak analysis, the Aussie dollar was the weakest currency that was out there, and the US dollar was the strongest currency pair that was out there. By the way, if you want to learn how to do a strong weak analysis, more details on it, email me again, rcrevofx@gmail.com, and I'll send you the information on how to go about doing it so you can understand it yourself. So the charts that I have here are a weekly, a daily, a 4-hour, and a 1-hour. And we can see by looking at the weekly chart that definitely the pair is in a downtrend. It's making lower highs, lower lows. We started to move in the up to the upside here, but it never touched that upper Donchian channel. So on the weekly chart, we're making lower highs and lower lows continuing, and we're in an open sell position. On slow stochastics down here, we're open. We've got angle and separation to the downside, indicating that there is more downside potential on the pair. Notice I said the word potential. And if I want to take a look and see how far this pair has room to move based on the weekly chart, I just scroll out. Previous low was at about 73.70, and if I trace across that horizontal line right over here, I can see that if the pair potentially continues to move to the downside, it has a fair amount of room to move until it reaches another support level. In fact, it's got about 350 some odd pips to move. So I'd definitely be interested in taking a deeper look at that particular currency pair based on the weekly chart. And the daily chart also has been making lower highs and lower lows Didn't touch the upper channel here, still taking out the lower channel. So we're in an open sell position as well on our daily chart. So whenever I see that scenario existing, I go down to a lower time frame chart and look for opportunities for entry. Now, the ideal entry for those of you who are familiar with the Donchian channel strategy is I want to see price action take out the upper channel and then take out the lower channel. So this would have been the ideal entry right there on the earlier today on the 13th. We missed that one, but there's always an opportunity, not always, but a lot of times, and in this case there is, an opportunity to re-enter, and I can do that if and when price action moves down and takes out the lower channel or takes out the lowest channel at 73, roughly 73.73. Now what I do is I'm going to set a price alarm at roughly 73.73, 0.7373, so that if and when price action reaches this level again on this pair, I'm going to go and check out the charts. What I want to see is the Aussie dollar weak across the board? Is the US dollar strong across the board? Is that Aussie dollar moving down against all currencies that it's paired with? Is the US dollar moving up against all currencies that it's paired with? That's going to give me some more insight as to how this pair is moving over time. And also, if the Aussie dollar is weak across the board and the US dollar is strong across the board, it's going to be another trading edge. It's going to give me more opportunity as I enter the trade, should I decide to do that after I examine the charts when my price alarm goes off. It's going to give me a greater edge and provide a greater likelihood that my trade will continue to move forward. Not a guarantee, but again, a greater likelihood. And we can see here on slow stochastics set to 15, 5, and 5 that potentially, again, the fast line, the K line, is set to roll over, potentially again the slow line, the D line, and if that in fact happens, that will be another trading edge that will be putting the likelihood of success in my favor on that particular trade. So that was a little bit of a more in-depth analysis than I do a lot of times on the pairs, but I just wanted to get you started a little bit on how I go about doing this. So that was the Aussie USD. And the next pair I take a look at, based on the strong weak analysis, is the Aussie yen, because as I mentioned, the Aussie is the weakest currency. The yen is the second strongest currency. So I'm going to go and I'm going to look at the Aussie yen currency pair here, and there it is. And I can see here that the pair is oscillating a little bit more on the weekly chart. We can see we moved down, we moved up. We haven't touched that upper channel though. And we've moved down again. It's trading above the 200 period weekly average, simple moving average on the weekly chart. There's strong angle and separation to the downside on the weekly. So again, based on the weekly chart, I'm looking for selling opportunities on the pair. Again, this is confirmed when I look over to, hang on, my cursor wasn't moving there for a minute. As I move over to the daily chart, same thing. Lower highs, lower lows, hasn't taken out the upper channel and has retraced nicely. Again, an open sell situation here on the daily chart. So then I go down, like I said before, I'm looking for an opportunity to enter in the direction of these two longer term trends off of a shorter term chart. This is multiple time frame analysis. So I can see here that price action has been moving up. It's respected that 200 period simple moving average. It can move up for as long as it wants to. I'm basing my trade on this 1 hour chart on the direction of the trends that I'm seeing on the weekly and the daily. So what I'm looking for is for price action to move below and take out that lower Donchian channel right there. And that lower Donchian channel, where it is at 90.01, reflects, hang on 1 second, I want to change. Sorry, my cursor is hesitating there a little bit, at roughly 89.99, couple pips difference right there at that level. So I would set a price alarm at roughly 89.99, right in that area, and I would come and take a look at the charts at that point, because on the 1 hour chart, if it takes out that level, it has room to run for about 60 pips. Let's see on the weekly chart how much room it has, because that can change the whole situation as far as I'm concerned if it doesn't have a lot of room to run. And on the weekly chart, now notice that nice angle and separation to the downside that we have there. If we move down here, we don't have a lot, not as much as we did on the other currency, but roughly we've got about, hang on one second. Down to that level, we've got about 80 some odd pips to move. I like to see a little bit more than that, but if I was interested in this pair, I'd be setting that price alarm roughly at the previous low, which is at 89.29. Again, when that price alarm, if that price alarm hits, I'm looking to see if all the Aussie pairs are moving, if the Aussie is moving down against all currencies that it's paired with. I'm looking to see if the yen is moving up against the various pairs that it's paired against. The next pair that I would take a look at is the pound Aussie, because the pound is the third strongest currency that's out there. So let's take a look at the pound Aussie. I know it's here someplace. There it is. And see what that's showing us. Okay, here, I mean, we can see we've definitely got a nice move to the upside going on here. We've got slow stochastics above 80, which is in the overbought area, which is fine because once a currency pair gets overbought, it can stay overbought for a long period of time. So we're open buy on the weekly, higher highs, higher lows on the daily. We're on an open buy situation. Excuse me. Here on the daily chart, I see a little bit of negative divergence, which puts me off a little bit on the daily chart here. We had a pullback, not to the lower channel line, obviously, but a pullback. If I'd be interested in this pair, I'm not as excited about this as I was the Aussie USD. This pair I'd be looking at potentially setting a price alarm maybe at 2.1036, right around in that vicinity, and then come revisit the charts again to see if the pound is moving up across all currencies that it's paired against, and see that the Aussie is moving down against all the currencies that it's paired against. Now, I would do it in the opposite direction. We said the dollar was the strongest currency. Let's look at, we've already looked at the dollar Aussie. Let's look at the New Zealand US dollar. The New Zealand dollar is the second weakest currency that's out there. So let's take a look at the New Zealand dollar and see what those charts are showing us. And there we are right there. Again, nice strong move to the downside. Almost makes me definitely want to wait for some retracement here. We've got slow stochastics below 20, so oversold, and that's fine. And we've got open sell on the weekly. We've got open sell on the daily chart. So we're looking for a way to enter this trade short on the lower time frame charts. It's already triggered on the 1 hour chart right here. So we want to now go down to, let's take a look at the 4 hour chart where we haven't taken out that lower channel yet. So if I want to be very aggressive, I'd set a price alarm on this pair maybe at 0.6680 and revisit the charts then, again with the idea of seeing how the New Zealand dollar is performing across the board and also seeing how the US dollar is performing across the board. That would be an aggressive entry at that level. A less aggressive, more conservative entry would be at that lower channel, set a price alarm at about 66.20. In that area, we've got nice angle and separation to the downside here. Let's go back to the weekly chart to see potentially how much room to run this pair might have. Okay, now what I see here puts me off a little bit on the trade, and that is, you see as I go across that horizontal dotted line at about 66.08, you can see it pretty much bottomed out at that level. The lower downtrend channel is at 66.08. This lower channel over here is at 65.60. So we've got roughly about 40 pips of room to move until it hits an old support level. And I do mean old, May of 2010. But that can still impact how a pair moves. Now, if it gets below that level, then we've got